Let's bring in Nicholas Smith, MF Global Director of Equity Research, and he joins us from our Tokyo studios. Nicholas, good Friday to you. Let's talk about Dai-ichi Life, which you says is a pretty soporific topic right now, but not bad. 14% gains right on day one. I mean, what's the outlook on the stock, considering it's such a huge offering that a lot of people are including it in its portfolios?
Yeah, and I think when people say get a life, I don't think they're talking about Daiichi Life. I think it's pretty cheap and cheerless here. The thing's sort of cheap in that, was it 57% of embedded value? That's cheap. The growth, well, there isn't any, so it's pretty cheerless. I think policy sales to individuals down all of the last 12 years.
Okay, but Nicholas, you know, here's the bright side on being such a huge offering, right? You get to be included in a lot of indices, also a lot of tracker funds that have to include it now. So there are some gains left, right?
I would have thought it will stabilize at about present levels now. Yeah, it's being pulled into a bunch of indices, but you know, I think pretty quickly people start to say, what is this thing worth? And I don't know, what is something that's worth that flatlines?
Okay, well, let me ask you then, what about the news that Daiichi Life is looking to expand outside its borders and going for acquisitions with the $11 billion that it raised?
Well, yes, of course. Growth in almost anywhere is better than growth inside Japan. So I think you'd probably be better talking to a financials analyst on the precise details of that, but I don't think that's going to be contributing to profits in the very short term.
Okay, so a flatlining then for Daiichi Life from here, Nicholas. Okay, you don't sound very enthusiastic about the Japanese market. Let me talk to and play you someone that is pretty optimistic.
This is going to be one of the best markets in the world this year for hedge funds and for long-only investors, and 95% of all investors will walk away from Japan and not be invested.
There you go. You're hearing Ed Rogers there, Nicholas, who sounds, again, pretty optimistic and enthusiastic about playing the Japan markets right now. Do you agree with him?
I think we're going to get a pullback, certainly. The advanced decline ratio, TORAC, is up at 150%, which is, I think, the highest we've been since 1997. The market's up 40% from its lows of last March. Looking at the profits people are looking for, recurring profits for the year just ended on day before yesterday, up 50%, and analysts are looking for another 44 in the following year. There's a sort of cheerful optimism there that makes me feel kind of there's an abattoir air about it. You don't come out of, I mean, the global economy is not out of the oxygen tent yet. So I think it's important that people understand that you can't confuse that defibrillators kick with a return to the races.
Okay, so you're saying basically take refuge right now in these value stocks because the wheels will likely come off the party wagon, I guess, when stimulus is withdrawn. So where's the value?
Yeah, well, I think as we come through results, there's going to be a bit of a shocker. We're going to see people pull in their forecasts in perhaps areas like steels, in autos, and perhaps in electronics. I think there's something of room for of positive surprises in the banks, and they're certainly pretty cheap. Bankrupts have been very low over the last 3-6 months. It means loan losses will be lower. You know, valuations on their equity holdings are going to look a little bit better. So banks are certainly worth a sniff right now. Generally, we've still got 57% of stocks trading below book, so that's the area to be hunting in. Stocks like Amada, perhaps Fuji Photofilm need a sniff.
Oh, okay, worth a sniff then. Okay, Nicholas, thank you so much for your time this morning. Nice seeing you. Nicholas Smith, the MF Global Director of Equity Research in Tokyo.